Is now the right time to be shorting gold instead of going long, or is this breakout for real? Is silver going to follow suit anytime soon? And more selfishly, are my gold and silver stocks, most of which I'm still underwater on, going to finally wake up anytime soon? And should I even bother with gold and silver stocks going forward from here on out? Or is this kind of a buy and hold physical type of market? Todd, I have a lot of questions here for you today, so hopefully you'll be answering some of those for me in this Real Money Talks episode. Right after that, by the way, for people listening, I'll be hearing a new gold exploration story that was requested by a viewer of the channel. So I'm going to hear from John Florick of Emperor Metals. Timestamps are on your screen. They're also in the description, but they're also on the time bar in YouTube. Feel free to use those. But first of all, Bubba, sir, thank you for being here. And I know you're a busy man, so I don't want to waste your time in pleasantries and introductions. I'll just briefly compliment you on that blazer. I don't know if anyone ever has, but I think it's great and you look good. Thank you for being here.
It's my trading jacket from when I traded on the floor.
That's what I figured. Yeah, I don't. Sometimes I see your name tag. It says Bub on it, right? There you go. There you go. Well, I want to talk to you about gold and eventually about silver and other resources potentially because I think it might be, I think the price action we've seen in gold since the Fed cut rates, but also actually throughout the last 52 weeks might be suggesting what you've been saying for a while now, which is that when the Fed cuts rates, we'll see another wave of inflation. So I guess my question here would be, is gold going up just because it's going up, or is it predicting an inflationary wave, and how do you see it unfolding?
Well, I think it's going up for a lot of reasons, but one of them being that I think inflation is going much higher. One of the reasons for the rate cut is that is to inflate the economy. So everybody thinks that a rate cut is a good thing, but really what it really is telling you that you're paying more taxes because, of course, if you spend more money and you go to the store more often, you're paying a federal tax. So the federal government needs tax dollars. So they want inflation to go higher so they can get those tax dollars known as the hidden tax of inflation. I think the other thing when you look at gold has been very strong. It's a good, solid, hard asset. But I think there's something that nobody talks about, which is the way that the world is operating right now with this whole thrive and drive for globalism, which I don't agree with. I think that you're understanding people might believe, and I do, that you may need gold and silver as an actual currency at some point because paper dollars may start to be returned and people may not want to take them. Because when you see the government and the Federal Reserves and the central banks around the globe, and by the way, the central banks have been stealing from England starting in 1600, okay, all they do is devalue your assets. And I think that people are starting to realize that I may need this not only as an alternative investment, but as an alternative currency because I may need it to buy food and groceries.
Hmm. That's I don't know. You say that interest rates going up is maybe not a going down is maybe not a great thing because it's going to push inflation. But I suppose it pushes my stocks up, and so I should be happy, and everything's well with the world.
Well, it's pushing your stocks up right now, but let's see after the election. Let's see 6 months from now if you don't sell those stocks. Let's see how they're going to do then. I would suggest that there's a massive sell-off coming. I would suggest that the banks are in very big trouble. And I would suggest that when the banks are no longer in control and now the politicians are basically in control and have all the money, that's a much bigger problem than you or I care to figure out. And I think it's going to come to roost. Remember, we do have an election here in the States in the next, 41 days or whatever it is. And this is going to be one of the biggest elections, in my opinion, in the history of this country. Because if we stay where we are, you know that they want globalism, socialism, or communism. And again, pick the ism you want, but the one we really want and the one that everybody should want is capitalism, because capitalism is the only thing that gives you, if you let it trade freely, then interest rates wouldn't be in at 4.5%, they'd be at about 7% because that's the fair value right now. Prices change. If you destroy all competition by going into a socialistic system, there's no more competition, which keeps your prices high. When you go to the grocery store, when you go to the clothing store, wherever you go, your prices are going to be higher without competition. And that's what they're trying to do. They're trying to eliminate competition and allow the big corporate world to exist and not let the small guy come in and be a capitalist trying to be an entrepreneur and make a new business.
Do you think that when stocks take a beating Do you think gold's going to follow suit too? Do you think gold needs to take a breather from here on out at 2,600, 2,700? Or how do you see that unfolding?
Well, gold's pretty overbought here, and I would not be surprised at a sell-off. However, I wouldn't be surprised if gold got to 27, 2,800, maybe even 3,000 by the end of the year. But to answer your question, the next big sell-off in the equity market, everything will go down first, and then the asset classes that have strength will then start to rise. But remember, the first big down move basically becomes wholesale selling of everything. People want to get rid of everything. They want to raise money, and typically, which is the wrong thing to do, but most investors will sell their strong stuff first because it's profitable and then worry about the other stuff. So that's usually what creates these market meltdowns. But so again, I would expect, if I'm right, and I may not be, but if I'm right, I would expect wholesale selling everywhere. And then I would expect gold and silver and asset classes like that to pick up some strength as protection and as alternative currencies and other things.
Yeah, it seems like everything that has a bid on it catches that bid in a liquidity event, I suppose. And I tend to agree. I remain bullish on gold as well, especially in the town of fiscal dominance, of which we seem to be permanent residents now. But at the same time, I'm seeing bullish headlines everywhere. And even commercial banks are now calling for higher gold price. I think I saw a UBS headline today. So how do you reconcile being bullish on gold as well as being contrarian at the same time?
Well, again, if I'm trading, now remember, there's a difference between trading and investing. Because if I'm investing, I don't care where it goes in the next 6 months. It really doesn't bother me one way or the other because I'm not selling it. I'm not buying it to trade it. If I'm trading, which I am, also, I mean, I do own physical, and that's the one thing I think everybody should recognize is what I'm talking about is buying physical metals, because paper metals, the futures markets or the GLDs or those type of assets, I don't believe there's enough gold in the world to satisfy the amount of paper that has been sold. So if you want the real protection of the asset, then you need to own the physical asset. But from a trading standpoint, the markets are really pretty much overbought here. So it wouldn't surprise me if gold went down $100 this week. And I wouldn't even think twice about it for my long-term holdings. But of course, I would be a seller in the short term. So again, I'd try to double dipping here, catch the short move on the way down, and then buy some more and then have it go back up. But again, we are overbought. And as you said, that everybody's buying it right now. And this is always the story in any world where everybody's on the same side. Usually that side fails. And I think that you'll see that here as well. But I mean, failure is a relative term, and I don't think that we're going to collapse. But I do think that gold is good for a good old kick in the butt. And I think that you should see some selling, which I think that'll be more of a buying opportunity when we go forward. And that's, again, even Costco, which started selling gold bars, every time they bring them in, they sell them out. So that does tell you there is a demand, which on hard assets, that's an important thing, the supply versus demand. And we don't have enough supply, which is what's keeping prices higher right now.
Well, but so you're trading it yourself because you have that experience, obviously, of years and years on the trading floor and everything else you've done after it. Do you think that's how regular sort of average IQ, to give myself a compliment, people like myself should do? Do you think we should trade around it, or is it just kind of a buy and hold environment for us?
I think it depends on if you're a trader or if you're an investor. There's a big difference between the two. So if you're a trader as well as an investor, then yeah, you trade around it. But if you're not, then just hold on to it. Remember, gold has gone up in history year over year, just like the stock market has gone up in history year over year. They've all had their fluctuations and their movement. But if you're an investor, buy it, forget about it, because you don't want to sell it. And when you decide that it's time to sell as an investor, I can guarantee you're probably selling at the bottom, because that is typical of most investors when they have to panic out, because nobody's going to sell it until they're in a panic. And you're going to be selling the bottom. So I would say to you that if you're an investor, buy it, forget about it, and hold on to it. Same as I would say with you in the equity market, because again, the equity markets have gone up 8.5% year over year since the inception, and 10% year over year since 1950. So unless these companies are going to collapse, unless the United States of America is going to collapse, I see no reason not to hold those. Now, you want to hedge, which I do, or there's other things you can do to still be an investor and not a trader. But you have to first decide, am I investing or am I trading?
I do want to talk about that potential collapse later on and how the equities have been responding. But now that you're talking about trading, you're kind of reminding me of a lot of the shenanigans that happen on the high levels within commercial banks and stuff like that. Do you think we'll see an increase shorting or some type of shenanigans if gold keeps going like it has?
I think they might try, but we have to remember one thing, okay? That price discovery and markets have to have a buyer and have to have a seller. So if they want to try to create some shenanigans, that means that they are selling at a price below that would be fair market value. Now, obviously, there's a lot of arbitraging. You know, when they talk about the central banks or the banking systems like JP Morgan, those that are always short silver, they're doing other things on the other side of that trade. This is not a trade that they're saying I'm shorting silver. They're probably buying long silver calls on the other side while they're holding on to a short position. Again, there's no bank that just takes the risk and says, okay, we're going to manipulate the price down or we're going to force the price down, because they're going to find buyers. And when they find the buyers, somehow they're going to have to be able to exit their shorts at some point. And of course, that's why they're buying another side. And again, everybody gets all hopped up on one side of the market when a true arbitrager, which the banks are true arbitragers, they're doing something on the other side to protect that short position. And they're trying to make money on the short position while they're still long the market.
But so you don't seem to agree with kind of the traditional manipulation of silver narrative that is typically put out there.
Again, I don't believe in manipulation. I think the markets take price discovery. Okay. No matter what's going on, listen, the interest rate market is not total price discovery, but if you push markets too far, remember, you have to deliver at that price that you are selling. So if you're manipulating the price lower, we've watched silver for years, we've watched gold for years. Every time they push it down, it bounces back. And if we go back and look into history, we see that prices continue to go higher, whether they're inflating because of inflation or whatever. I mean, there's a lot of formations that form in futures markets, in which is where they have to do the manipulation. They can't do the manipulation in the physical market, because in the physical market, you can't sell what you don't own, right? You can send the promise of delivery, but you can't sell what you don't own. So again, I'm not a big believer in that total manipulation. I'm a believer that they can try to push prices down, but they're going to push them to a point where they're going to attract buyers. And when they attract buyers, eventually they're going to have to cover that short position.
Because I suppose a lot of that happens in the paper markets, right? In the ETFs and stuff that are not backed by physical currencies. Do you think we'll see an increase of that? Like, are we going to see other derivatives or other paper shenanigans?
Well, you could. That would be the more likely scenario to what you're asking, is that they could be accumulating physical silver and physical gold and selling the crap out of paper. Okay. Because paper will typically carry a premium, especially if they're selling options. Okay. So they're probably, that would be the correct way. If you were trying to manipulate the market, it would be to buy the physical and short the futures and short anything that has premium to it, because you already own the physical side of the market. So you're not worried about how high it goes. So your short positions become a moot point, versus if people get wind of it and think that, well, the market's going down, you start to see some selling. They get to cover their shorts, hold their long physical position anyways. You know, I don't know if you remember, but a few years ago, the GameStop people who tried to short silver, they tried to call for a short squeeze on silver. Yeah. And of course, I said immediately, and I'll say it now, there is no way that the silver market is way too big to try to pull what they did with a GameStop. And of course, it lasted for 5 minutes and it was over, and then it got collapsed. And again, these are things in markets. Remember, no big firm, no big bank is taking one side of the trade. They're not gambling. They're basically lining their pockets because of the investors who fall for the trap that Goldman Sachs or JP Morgan is shorting silver. So I better short silver. Okay, or I'm shorting gold. Again, it's all nonsense, because they've got another side of that trade.
And again, to your earlier point, Todd, is that if you're an investor, which I like to tell my mom that I am, she still believes that I'm just unemployed, but that's a different topic. But so if you're an investor, you kind of want to set and forget and kind of ignore these all the shenanigans in the intraday or intra-week and intra-month movements in the precious metals.
Always. I will put it very simply. Okay. I tell everybody, you know, I own gold, I own silver, I own platinum, and I buy it all the time. And I put it in a safe. And I go, it won't get sold until I die. And my kids sell it when they inherit it, because I'm not selling it. I have no reason. First of all, I'm investing with dollars that I can afford. And I'm not worried about, I'm not trading it. So I'm not worried about the day-to-day movement. I don't even know what I paid for half the gold. So it doesn't really matter to me. That gold is going to be sitting in my safe or in my safe deposit box until forever, barring the fact that I do need it for a currency, which I do believe is a real possibility.
And that's something again I do want to touch upon later on. But so gold is what we've been talking about so far. If we were to replace everything you've said so far on gold with silver, would it still all be true? Do you see the same path for silver as you do for gold?
I see a bigger path for silver, actually. Now, again, it's been silver has struggled for years now. We're finally getting back into the 30s. Remember, well, you may not remember, but you're pretty young, but it was $49 at one point, not that long ago, right? 20 years ago. Okay. So I wouldn't be surprised. And again, I don't think we'll get past the mid 30s this year. Okay. But again, I would say that all time high is in play. And I think silver is a much more affordable for most. And remember, this goes back to my theory about currency. You can't just buy gold if you need currency, because who's going to make change? And if they make change, what are they going to make change in? They're going to have to make change in silver. So this goes back to a price discovery model, back to a system. So certainly I'm a bigger buyer now of silver than of gold. Now I'm a buyer of gold, but I'm a bigger buyer of silver because I think the appreciation value is greater over time. And I think that, don't forget that silver is also an industrial metal as well. So, but at the end of the day, I think that the growth period, let's face it, silver is 40% from its all-time high, where gold is at all-time highs. So if they catch up, then where do I make more money? I make more money on silver than I do on gold.
True. I think it was 2011 when that happened. So I must have been chasing girls at the time and not really dollars, which bad decision at the time.
And now because it takes so much more to chase the girls than it is to chase the dollars.
Wish you had told me that back then, though. Would you expect any type of reaction from the government, though, if the let's call it the gold to dollar exchange ratio really got out of hand? Like if we have $5,000 gold, is there going to be any type of reaction from the government?
No, they'll continue to devalue currency because, again, their goal, in my opinion, or at least this administration's goal, in my opinion, is to get communism, okay, socialism, whatever. You can name whatever you want. You live in it, you understand it, and I don't think it's very good, and it does not benefit the middle class. And let's remember that all great economies are supported by the middle class. The rich, they don't care one way or the other, because if the markets get creamed, they get richer because they buy more. They have capital to play with. The middle class right now, for example, in the United States, you've got over 21 million people are paying over 30% a year for rent. Okay. You can't live like that. Okay. The cost of inflation is killing the middle class in this country. Okay. And that's all to get us into this socialism environment. Okay. Or again, I call it more communism, because anytime anybody wants to control what I think, what I say, and how I live, I think that's a problem. And that's what they're trying to do. Again, what are they going to do? There's not a lot they can do. If the markets get away from them, there's not a lot they can control other than to devalue the currency to make the price lower.
Well, a lot of the pushback in that case comes like, oh, but what happened during the 30s? They confiscated it all. They called it in and they revalued the gold. Is that something you think still could happen in a modern day economy?
They can try. I don't know how they're going to get to it. And remember, there are other ways to play the market now, especially if you bring in the cryptocurrency world. You can store that in crypto for a while, because I personally believe that crypto is real as well. Unfortunately, I wasn't an early enough believer and an early enough player, but I do believe in it. I do own. Okay. And I will continue to buy that as well, because that is one thing that no matter what they try to do, I got a flash drive. I got a dead wallet that I can put it anywhere I want. Nobody's going to know about it until I need it. So again, I think if you're defending, but I think long before that would happen, I personally believe there'd be a revolution. Okay. And I wouldn't be surprised, because I think that what you're seeing in the United States right now is, the buildup to the next potential revolution.
I like that. A lot of the people who are bullish on gold, who I talk to, typically don't like crypto. I don't own much of it myself because I never really had the bandwidth to manage it. But I like that. What about BRICS in that situation? I said the government, and so obviously I meant the U.S. government in that case. But most of the BRICS nations seem to be stacking gold. Wouldn't they have a reaction to gold going to 5,000?
Of course, I mean, this would be good for the holders of gold, but let's look at the percentage of people that actually own any gold that would mean anything to them. Okay, there isn't a lot, right? There isn't a lot of people that have investment dollars that are storing and holding gold, other than the big bank systems and, of course, the BRICS nations. But basically, the biggest controller of gold are the central banks and governments.
Hmm. Yeah, just based on supply demand in that case, I suppose, because they have the most buying power and the most firing power when it comes to gold.
And they create the most criminal side of it because, of course, again, if you look at the paper, the amount of gold out there, I mean, I'd like this. I'd like to audit Fort Knox and see if there's really gold there. It goes back to the old story that, in banks, fractional banking, which where they can lend out 10-1, they used to paint rocks gold to pretend like they had enough to cover the amount of money they were lending. That's what happens to be a factual story. So again, I don't trust the governments. I don't trust what they're doing, and I don't trust what they tell us because, of course, as it is today, at least in the United States, the bankers aren't their most powerful people anymore. The government is the most powerful.
You don't think there's any gold at Fort Knox? Because you said I want to audit it.
That was more tongue in cheek, but I would, one thing I don't know, and one thing that we can never get as citizens of the United States is I'd like to see a full audit of the Federal Reserve. Okay, I would like to see a full audit on the banking system because I personally believe that the banks are over leveraged. But of course, because the Federal Reserve is supposed to be a private corporation and controlling the banks, they don't make them do that. And again, how can you have a banking meltdown in 2008 if they're monitoring correctly?
I wish they'd allowed me to live as the Federal Reserve. That'd be fun for a while. Yeah. Seems like the GDX and the GDXJ, although muted, have had a comparable reaction to the rate cuts as did gold. But did you expect that? And do you share the same optimism on the gold equities as you do on the metal?
Well, I mean, again, I'll trade the gold equities. I'll fool around with them a little bit. But again, if I'm looking to buy and hold, I'm not buying those. I'm buying physical metals. Okay. Again, I don't mind trading paper, but I'm not holding paper. Again, I don't have any representation of gold in my long-term portfolios. Okay. I go back to, I don't think there's enough gold in the world to satisfy the amount of paper. So if I decide one day that I want to get my money for all that paper, I don't think I can get it.
What do you have? I mean, in your long-term portfolio, because I can understand the sentiment toward the miners. They're typically not great businesses, but what else do you have in there?
Well, I mean, listen, I have Apple, Amazon, Google, I've got, I mean, if you want to count my physical holding in gold, silver, and platinum, I've got that. I've got, listen, all companies that I believe are going to be around for the next 20 years. When you invest, your objective is if you follow the theory that the markets go up 8.5% year over year, but that company has to be in business. So it doesn't mean you're out buying some of these ridiculous IPOs that come out. And if you remember not that long ago, Beyond Meats. Okay, yeah. Beyond Meats was $250. I said, there's no way. Peloton was $1 million. There's no way. Why? Because they have nothing. There's nothing unique and they don't make any money. As much as I have disdain for Warren Buffett, okay, in the 90s, he said the most classic words. He said, there is no such thing as a new economy, old economy. A company has got to make money to attract shareholders. And that is fact. Because again, after the fun is over, look what happened to the internet bubble. Look what happened in 2008. After the fun is over and the people are done chasing, they're out of money. They're forced to panic and puke out and the markets melt down and collapse.
I feel like I'm in danger having most of my money non-revenue generating exploration and development companies. But at the same time, this period's like the 2000s on the back of the China supercycle, as they call it in the commodity space. So 2000 to 2011, when silver hit that $50 high, that you do have those non-revenue generating exploration development companies, gold, silver, other commodities do very well. Do you think we're going to see another period like that anytime soon?
I can't answer. I don't have the answer. I think we will. Okay. But again, I'm not a cycle guy. So, but I do believe we're going higher. Again, I don't believe we're going to go back into the 600s. I think that if we go down, we can go down to 2000 in gold. Again, I'm a believer in the asset itself. And remember, when I first started trading on the trading floor, the Dow was 800. Today, the Dow is 43,000. Okay. So again, remember, there's a component that nobody ever counts into an asset, and that is the inflation side of the asset, right? I believe that a lot of the asset classes that have been under pressure, like the grain markets and other markets, will inflate now, because that is what the interest rate cut was meant to do, was really meant to create more inflation. And those asset classes will have to inflate to keep up, because of course they've got a lot of costs. And before the last couple of days, farmers that were planting grains were planting at a loss because their input cost was higher than their output cost.
Oh, okay, but so there are other asset classes within commodities that you also think are going to do well. So it's not only gold, like you like.
I think commodities in general are going to explode higher. I think this was the drill. This was the determination. And I think that money will come, as it always does, from the equity market. I think the equities are due for a pretty massive, severe sell-off. And usually that money flows into alternative investments. And the number one alternative investment is usually like the grain markets, corn, wheat, and soybeans, and other commodities markets. And I do think that's what you're going to see, because I think you're going to see a massive inflation move. Again, I go back to the interest rate, which has been going up since they cut rates. I go back to the PCE, which states that the American people are paying more than they're earning. Okay, they're spending more than they're earning. Not a good situation. I go back to the cost of what we're paying for food and groceries. Not a good situation. The CPI number they report is all ridiculous, because again, it only accounts for 4% of food and energy. And I don't know about you, but I know that here, that the average person, other than an emergency, is spending a lot more than 4% for food and energy.
Yeah. Yeah. We like showering sometimes every other Sunday or something like that. But we do. The broad equities indices in the US also reacted positively as expected, though, to the rate cut. I mean, the S&P.
Well, actually, they didn't. They didn't initially react. They initially collapsed, but they sold off pretty hard on Wednesday afternoon. Okay, which I wrote about before it happened. I said anything more than 25 basis points, they're going to sell off. Okay, and they did. And then they came back and rallied on Thursday. But they were up, like the Nasdaq was up like 300 and closed down like 200 on Wednesday. Okay. And I don't think it's over yet. I think one of the things we're seeing in the market, there's a lack of participation, and there's a lot of, call it what you want. The fancy term here is the plunge protection team is continuing to float this market, because again, we know that our media is more controlled by the left than it is by the right. Okay. And of course, they want to keep these markets floating. And it doesn't take a rocket scientist to know what stocks to buy to keep the Dow and the S&P higher. Okay. At least for the next 41 days. Okay. Now it could change, but right now, you'd be with the election, 65% of election years are higher for equities. I think either before, probably after. I think these markets are in pretty big trouble, because I think we're overvalued. I think that we've got too many people in that are going to be panicking and puking out. And I do believe that the banks are in trouble, because over 1,000 regional banks have created and say that they're in trouble.
Well, can you maybe go a little bit deeper in that, though, and kind of help me understand what the dynamics were of that knee-jerk reaction, where the S&P first of all sold off, and then it took back off? Like, how did that happen? Why did that happen?
Well, typically, especially when markets are as thin as they are, you got oversold really quickly. Okay. And that creates what they call a short squeeze. It's like when I was trading in the trading floor, and, everybody's short, and wait a second, the markets are supposed to be going down. They're not going down. Okay. So somebody starts to buy, somebody else starts to buy. And the next thing you know, everybody's chasing like rats trying to get out. And that is known as a classic short squeeze. And when you're watching these markets now, there's really a lack of market participation. Volumes are down about 50% of what they normally should be. So it's a lot harder and it's a lot easier to control pricing. And it's a lot harder to see these massive trades come up, because again, you've got we'll call it the plunge protection team for lack of better term. But again, you've got reasons that a government might try to float and keep their market higher for right now.
So is this essentially kind of like a Fed put type of thing? Like, do you still believe in that?
Yeah. Oh yeah. It's 100%. Listen, it was proved that the greatest bubble builder of all time was Alan Greenspan. And of course, continued by Janet Yellen, who's a moron. And then added on to Ben Bernanke, who couldn't hold his water when they went into the May of 2010, when he went to raise rates, and the market had a panic attack, and he backed down. Okay. And of course, going into Jerome Powell, who I thought was a reasonable human being, until I found that he was an idiot. But I guess it's part about being in that building. When you're the Federal Reserve, you go from a smart, common sense person to an instant moron because you don't think about what you thought about your whole life, how you made your money. I mean, Jerome Powell came from our industry. Okay, he knows how the markets work, but he chooses to ignore how the market functions because the truth of the matter is the Federal Reserve is way off their mandate, anyways. Okay, they have two jobs: jobs and price stability. That's their job. Their job isn't to manipulate rates to try to create one side or the other. But they've done that. And of course, if you go back to 1913, which is when the Federal Reserve was created, the Model T was also created in 1913. Now, if you look at a car, it's made a hell of a lot more progress than the Federal Reserve. They're still doing the same things. But again, the whole Federal Reserve was basically built on stripping the American people of their capital through inflation and through other things. I mean, again, look at the value of the dollar. Okay, I'll make the point that I make a lot more now than I did in 1985, but I lived a hell of a lot better in 1985 than I live now.
Well, it seems like the only jobs the Fed is concerned with is keeping their own jobs, and that's it with all the layoffs that we've seen. And I don't know about Janet Yellen being a moron, because if you see her returns, those have been spectacular. That's maybe due to a different reason.
Well, I mean, again, look at what she says. I don't care. Listen, any idiot can force markets higher. You give me that control, I'll make the markets go to 100,000. Okay. Give me the control. Let me devalue your currency enough, and they have to go up. Again, I go back to what is better today than was in 1980 when I started, and the Dow was 800. I mean, is it truly worth 43,000 compared to the 800 it was worth in 1980?
You make a good point, actually, and there seems to be a disconnect in the broad markets as well, where equities are again disconnected from the fundamentals, but instead of lagging the fundamentals to the downside, like gold stocks have done to the metal, they're lagging what you call an economy disaster to the upside, kind of as to what do you think needs to happen for the market to realize that? What's the breaking point of the stock market?
Well, I think it'll be the banks again. I think the banks will fail. You already see. There's trouble in the real estate market in this country. People can't afford it, which is allowing BlackRock and those guys to suck up all the real estate. You know, again, that's not, people may think it's good. That's not good for capitalism. When you have, in this country, Bill Gates is the single biggest farmland holder in the world, okay, as a single person. BlackRock owns more real estate than anybody else. That's not a good position because that takes away the free market system, okay? I think that the banks are going to have a major issue again. I think they're well overexposed. I think they're well over leveraged once again. And I think they're only being held together by spit and glue right now until after this election is over, which is why I say that this is one of the biggest elections coming. Again, you cannot continue to strip the middle class of everything they have. And since the middle class is in a recession, and all you have to do is look at Darden Restaurants, which is Olive Garden, which is the famous one. But Darden Restaurants is telling you that they no longer attract the customer that makes 70,000 and below. They now have, their customers are now 150,000 plus because they're walking their way down because they're tired of spending all that money to go to a restaurant. I mean, I took my family out to dinner to Capitol Grill a few weeks ago. 6 people, it was $1,000 for dinner. I mean, how many people can afford to go spend $1,000 for dinner?
It's true. I've talked about that many times, and it annoys me when me and my wife want to go and see a movie, and then you have to pay like $100 if you want decent seats, and it's even worse over here. But and then it's all that you guys lost or
that's
are losing.
You got over there.
True. Well, that's what's waiting you unless you.
That's what I'm fighting against. But fortunately, I'm old, so it won't matter to me. But I'm worried about my kids and my grandchildren. That would be my concern. For me, it's not going to matter. Whatever they do is not going to affect me directly because I've done all right and I live okay. But again, I'm worried about what's going to happen to my children and with their children.
And Red Lobster is also going into a bankruptcy, so that's
Big Lots, another chain. And don't be surprised when Dollar Tree and the rest of those go into bankruptcy too. Because those people that go to those stores, they're tapped out.
This actually might be a good point to talk about something you said in a recent interview where you kind of dismissed wage growth as being offset by increased spending, which is obviously understandable given what's been happening. But there's kind of this argument that the middle class is actually doing better, which obviously I don't believe. But are there any specific sectors or industries where you think wage growth could actually have a meaningful impact on spending patterns or inflation, or is it really kind of all doomed?
They've destroyed all that. If we go back to 2021, 66% of the jobs that have been created since 2021 have been given to illegal immigrants. 33% of jobs gone to Americans. Out of those 33%, 50% have gone to government jobs. The federal government was never intended to be the biggest employer in the world. In fact, if you read the Constitution says government is run city, county, state, and the federal government is supposed to be just an overseer. Well, that is not the case. The federal government is the largest employer in the world, okay, which is totally ridiculous, which is why the politicians are more powerful than the bankers and everybody else now, because they control all the money.
Where does all that end, though? Like, do we have an Argentina moment where it gets really bad for a while and then we elect a Milei or type of figure?
Oh, hopefully they'll elect a Trump, because at least he's close. And I do believe that he has the American interest at heart. I don't think he's a true politician. I think he wants to see people succeed. But I think that really in this country, it could lead to a revolution. And I'm not kidding. I mean, I'm not saying that to be spectacular and make some crazy claim. I do believe we're on the verge. I think if you look at this country and see all the hatred and all the damage that's being done, and the lack of, the defunding of the police, the lack of actually law and order in this country, something's going to happen soon, because people are getting sick and tired of it, and they're not going to lay down forever. And I think that's a big problem. I think you will see, unless something changes and people start to be able to live, because you cannot create jobs because there is none here. They don't leave them here anymore. They send everything offshore. And I'm a big believer that the United States should be an island. Okay, we don't need anybody else. The only thing the United States doesn't have for themselves is some of the rare earth metals. Okay, Mali and others, but we could live without those. And to me, I'm tired of all the stuff that's going on. I'm tired of all my money going to Ukraine. I'm tired of dealing with China. Okay, to me, and again, I'm talking in my own opinion, but I don't want to do it. I don't want to deal with it. I think it's a mistake, and I think that this country is being brought into the globalism type of situation, which that's not what I want to see.
That's actually a point that Tom Luongo recently made in a conversation that I had with him, where he talked about CBDCs, and he sees that if a situation like that comes along, the government might try to control the crowds and everybody with central bank digital currencies and cutting off access to food and water and stuff like that. Do you think it really gets that bad? And do you see CBDCs having a function in all that?
I think digital currency is criminal. I think it takes away the rest of your freedom. Again, I'm a big First Amendment guy, right? I'm a big freedom of everything. And I'm a big Second Amendment guy. Okay. And digital currency takes away your freedom. It's like putting a chip in your head and knowing everything you do every day. Okay. And I'm not a believer in that. Okay. When they digitize currency, that'll be the final straw. And that will be the time that Americans and anybody else in the world who has freedom will have given up their freedom, because you'll be tracked from the day you're born until the day you die. And any spending you do, if you don't want your wife to find out something, she's going to find out. Okay. If you want to gamble on something, you can't. Otherwise, everybody's going to know. And to me, that is the last bastion of stealing your freedom and taking things away from you.
So you don't think there's no way to make them work, even if they're gold backed, whatever they do, there's no way to make CBDCs work?
There's no way to make anything work when they can track everything that I do and everywhere I spend my money. That takes away a lot of things in this world. And of course, you'll also destroy the oldest profession in the world, okay, because they're not taking digital currency. Okay. I mean, again, you're remember, a lot of illegal things occur in this country because government themselves get too involved with trying to tax it. Okay. If you look in this country, marijuana, okay, it's legal in many states, but it is not federally legal. And if they would federally legalize it, they would have gazillions of tax dollars. But they don't want to do that because they're waiting for the big companies to get set up to destroy the little companies and then federally legalize it. The same as prostitution. Okay. Again, listen, I'm not saying I believe in it, I don't believe in it, but you might as well make it legal and collect the tax dollars. All you do, like right now, there's a bill in Congress right now about taxing the gaming sites, right? DraftKings and things like that. Okay. And they go, well, it's just a couple of pennies. And it's not a couple of pennies. It's a lot of money. And what you're really doing is you're driving the customer to find an illegal source to make those plays. Okay. Versus standing up front, you're forcing and you're allowing the black market or the illegal business to thrive because DraftKings and those places are going to pass those costs on to the consumer. And guys who know how to bet, smart, intelligent people, aren't going to pay the surtax. And I remember back in the 80s when Hillary Clinton brought a bill to add on to a trader's trade like 1 or 2 pennies on every trade. And I go, are you out of your mind? And we actually had a pack and we went to Washington. Okay. That was because 2 pennies or 1 penny. I was trading at the time 50,000 contracts a day. Well, how much is 50,000 pennies?
Yeah, I see your point. And it's funny they call it black markets because a black market is essentially what the free market should be. So every black market is just a free market.
If you see, this is where they don't. They let the free market be. We pay less for all of our goods and services. Everybody makes money. There's plenty of jobs. There's plenty of opportunity. And for those who want to thrive, they have the opportunity. Right? What they're doing now is taking away opportunity.
Another part of inflation that's not often talked about is the tax inflation, because tax is typically, definitely in my part of the world.
Inflation. I talk about it all the time.
Yeah, well, but you do. MSM wouldn't talk about it. The government wouldn't ever want to. Like they would talk about defeating inflation, whatnot, but they're never going to talk about defeating the part of our budgets that takes like literally more than half of our money. Like I believe we're at 58% total tax or something like that.
Well, nobody wants to talk about that because, of course, you'd realize that you're getting screwed. Okay, I mean, let's face it. Government. If you and I lived like governments, we'd be in bankruptcy court or jail.
Yeah.
Okay. So let's not kid each other. The government has control trying to take your money. And they don't want to say that we're going to raise your income tax. So all they do is they create higher prices because when you go to the grocery store, there's a federal tax. When you pay your phone bill, there's a federal tax. When you go to the gas station, there's a federal tax. So the higher the prices, the more taxes you pay, even though you don't know it.
It's funny. I just came back from the US. I went to a conference in Colorado, and that's something that you notice in the shop. Like you guys don't put the tax on the price. And then so when you go to the register, things just cost more. And you're like, oh, so this doesn't cost as much as I thought it's going to cost. And that's like literally invisible inflation that you have to pay. There's no, I mean, I cannot be there and be like, oh no, I'm just going to pay for my goods. No tax, please.
Well, that's true. Now you of course can ship goods to yourself with no tax, but
True.
Again, that is the problem. Okay. Look, government is far too powerful and far too much of stealing from the middle class, okay? Because they have all these hidden ways to tax your dollars. And you said 58%. You know, my daughter moved to San Diego, okay? And the first time she got her first paycheck, she called me up crying because she didn't realize how much tax she would have to pay there. I mean, she pays about 60% of her total income to either federal or state income tax.
Yeah. Yeah, that's most of people's budgets. That's the largest part of people's budgets, and is not really discussed.
And that's why I moved to Nevada, so I don't have to pay state tax.
But is there anything else to do? Like, there's not. I mean, we're discussing it, and I like getting an insight into how it is. But can I do something knowing that I'm kind of, it's.
Well, move to where they don't charge taxes. You have to ask yourself a question. Okay, think about this. In the United States, the states that are thriving the most, Florida, Texas, no state income tax. The states that are always broke, New York, California, Illinois, lots of state income tax. So tell me, why do the non-tax states thrive and the tax states are always broke looking for more money?
Yeah, that's one simple way of putting it. Let's recap here, Todd. So you see, we have the elections. Shortly after that, you see bank failures, and we go into a recession, then simply come out? Or
well, I think we're in a recession now. I already think we're in a recession. They won't admit it, but I think we're in a recession. I think it gets much worse. I think we're in danger of stagflation going back to the Jimmy Carter era. Okay, that's where I think we are. We're either in a market meltdown and deflationary times, or stagflation, which is worse of anything because there's no jobs, there's no money, there's nothing. Okay, all there is high interest rates. I think that they have to let the free markets trade, which they're not going to, but that's what they should do. I think that you have. Listen, I've been saying this for, I don't know, 12, 14, 16 months now. I believe there's a 50 to 70% haircut coming Listen, it doesn't mean that I'm trading that, and I'm not short. I mean, I've been long the markets. I'm always long through my own holdings, but I've been trading the markets from the long side because I can recognize the market's not ready to go down yet. But I am warning, and I'm not telling you to get short today. I'm not telling you to sell anything. I'm saying that one day you're going to wake up and the market's going to start going down. And then there's going to be buyers that are going to come and buy it back up, but it's not going to reach. And then you're going to start to see a big sell-off. Now, the big meltdowns that we always talk about in history that we refer to, the markets are going down long before we got to that final pinnacle of the sell-off. Listen, I go back to 87. I was a floor trader. That October 19th was the end of the selling, not the beginning. The market's been selling off for 2.5 months before that got here. In 08, we were selling off long before Paulson went on Face the Nation and said the banks were safe and sound. Okay. Again, everybody points to a day, but the markets were going down before, and will start going down again at some point. And the collapse that I'm looking for won't happen until the very end of it, but it'll already have gone down. So let's say we're down 25%. Okay. The last 25% will come quickly, but the first 25% will be slow because people keep trying to buy it, because for the last 20 years, just had to buy the dip. And eventually that doesn't work. And I think that's closer than we think. But again, I can't predict when it's going to happen, but I do really, and deep in my heart and deep in my trading ability, to believe that's going to happen.
Stagflations are tricky to get out of, though. What's the way out?
Well, the way out is to get a government in that quits taking all the money and lets the free market prevail. That's the real way. But again, that's not, the new Democratic Party. Listen, I'm a libertarian, so I'm in the middle. Okay. But the new Democratic Party wants socialism, communism, whatever. Okay. They want you not to make any money. Okay. And the Republican Party has gone a little bit too far right as well. Okay. But at least they have fiscal conservatism. Okay. And again, we have to start with the spending. It's just like Johnson just approved that spending bill. I'd like to take him out. Right. I'd like to get him out of office, because why would you approve another Band-Aid for government to have them take more of my tax dollars to keep the government open? If you ask me, shut the government down. They don't do anything anyways but take money.
But so getting out of that stagflation or changing government, it's still going to take time. In the meantime, is gold kind of the place to be? Because I cannot conceive of an idea of what else does well in that period. Like, it's gold and commodities that do well during stagflation. That's kind of how I understand it.
We haven't seen crypto yet during a stagflationary period yet. But again, at the end of the day, I believe that all investors should have 5 to 10, 15% of your net worth in gold, silver, and metals, hard assets. Okay. Not paper assets, hard assets that you can touch, feel, and smell, because you never know when you're going to need them. Okay. And if you're a true investor, you're not spending them anyways. You're not watching the market tick by tick, day by day. One of the worst inventions ever was the iPhone. Not because it's a bad product, but because people are checking their 401ks every day. You're not getting out anyways. What are you checking it for? It doesn't make sense. Okay. I can tell you honestly, I haven't opened a brokerage statement in 5 years. I mean, listen, my son's the advisor, but I know what's going on in the market. I know what I own. I don't need to see a statement every 5 minutes, and I never look. I don't care.
The gamification of the stock market has also been interesting. You talked about the GameStop thing that was part of the proof in the pudding, I suppose, there for a second. What about real estate? I mean, when you said you moved to Nevada, did you buy your house when you moved to Nevada, or do you think real estate is going to go through more pain?
Well, I think real estate's going to go through a lot of pain, but I don't care. Okay. Again, here's the interesting part to look at. Okay. I moved to Nevada 6 years ago. Okay. I own more than one home. Okay. I borrowed every dime on every house that I had, because the interest rate was 2.5%. Okay. And I knew that I could make more by trading that money than 2.5%. So it made logical sense to me to borrow all that money. Anyways, I moved to Nevada, bought another house, mortgages to the hilt, because I was getting at that time 2 3/4. Okay. So now I was never going to move because interest rates are going higher. And right now a mortgage in Nevada is 8%. Okay. But I think the builders are in trouble. And when I bought my last home, which I'm in now, we've been here for 6 months, there was a deal that the mortgage rate would be 2.5% for year one, 3.5% for year two, and locks in forever at 4.5%. Well, I was able to trade my other house for a house twice the size of it, okay, and swap it. So to me, it was a no-brainer, okay. But I do believe it's going to collapse. But again, my house, I'm not selling it. I'm not trading my house. I mean, I'm here. This is where I live. Goes up, it goes down. Do I care? I know I pay X amount of dollars per month for it. That's it. I don't really care where it goes, but I do think the real estate market will collapse once again and will be a great buying opportunity for those who have capital and cash left to step in and buy.
Well, it's funny how the Fed cut interest rates, but the mortgage rates, yeah.
That should tell you 1,000 words in one little word, right? That what they're doing is not helping the consumer. Okay, the free market, the interest rate market is telling you that it can support much higher. But remember, you're not borrowing from the federal government, the Federal Reserve. Banks are borrowing. Okay, and not only are they borrowing dollars from the Fed funding window, okay, they get to take that money and let's say they borrow $1 million, use a round number. They take it in as a liability. They flip it in their accounting system to turn it into an asset. So now they've borrowed $1 million. They've taken it in, flipped it from a liability to an asset, although it's still a liability to the Federal Reserve window, but they've now flipped it in their books. Now they're lending out $10 million against it at their 10-to-1 ratio. Okay. What kind of con game scam is that? But that's what they do.
Yeah.
And that's what's allowed. That is what the government and the Federal Reserve allow them to do.
Yeah, again, I wish they allowed you and I to live that way too. I suppose that they get fun. What
the usury rates on your credit card, you go bust.
Exactly. What is we're coming up on our time that you promised me here today, Todd. What am I forgetting to ask you? What's important that we should be talking about, but that I'm failing to bring up?
Well, I don't think there's anything really important that we missed, but I just think that if you're investing, just invest in things that you believe in and things that make money, or gold and silver, which are, again, are hard assets that you're holding on to. I would never over leverage myself into a position that I would be forced to sell anything I don't want to sell, which means that you have to make sure you can pay your bills first. And once you're set up, I would just tell everybody to make sure that you invest whatever you can afford on a monthly basis into gold, silver, equities, whatever you want. But make sure you're setting aside and you pay yourself first after you pay your bills. And I think that, again, investing is way different than trading. And if you're not a trader, don't watch the market minute to minute, because it's not going to help you. You're not going to do anything anyways.
It's mostly going to make you sad most of the times if you made the same choices I did. For people listening, it's bubbatrading.com if they want to know and read more about Todd. Well, why is it Bubba, by the way? Where does that come from?
Well, that was my nickname when I was a kid. Okay. And when you go to the trading floor, you have to get a badge. Okay. And they didn't have my initials, which everybody gets. So I said, "What about Bubba?" They said, "Yeah, I got that." Boom. So that became my company back 46 years ago.
And that's stuck around for almost 5 decades.
I'm still using it. And if some people say anybody named Bubba, I don't want to deal with it. That's okay. No, I don't care. Listen, I know more about markets than anybody. I don't care. You don't have to deal with me. I'll teach you fair and square. That's all I can tell you.
That is a great nickname, and also I suppose that's a good way to look at life as a whole. But if we get into that topic, we might be talking for another 2 hours, Todd. And I have someone waiting for me in the room. I'll let you drop off now. Thank you so much for doing this. Bubba's website is on the screen right now if people want to know more about him. But Bubba, I'll let you drop off now, as I'll be moving to my favorite part of this Real Money Talks episode. And that is, of course, the disclaimer, right after which I'll jump over to the CEO barbecue, of course, to hear from Emperor Metals. But there is a warning on your screen right now that you're obligated to read, but you're also advised to do so, because this is not just some run-of-the-mill disclaimer. It is an actual warning that I think will help you not lose money or lose less money, which, by the way, is the norm and should be the expectation in this sector. That's what typically happens. And that's part of it too, by the way. I am here to make money. I make money from the existence of this channel, and specifically from companies paying for the production of these interviews. Now, in this episode specifically, none of the companies you see, and it's really only one company they're going to see, but so Emperor Metals has not paid to be here. Okay, this is a free interview. It was a request from a viewer, so I'm not being compensated by the company to produce this interview, but I typically am. And that also doesn't mean that you should look at this episode any different than any others, because even though Emperor has not paid to be here, they are still likely seeing their participation in this program as a chance to do some marketing. So start by understanding that. And just in general, start by understanding that most company communications online, albeit this interview, other interviews that won't always disclose payments, but even their presentation or their Twitter profile, and even their news releases, their website, those are all marketing tools for these companies. And although I don't make buy or sell recommendations, because in my opinion, there's a clear conflict of interest, many out there will do. Many out there will talk up companies, be paid by companies to talk them up. That is the reality of public companies on the internet when they get discussed. So be aware of that. And you should be aware of that inherent bias. Okay, there's obviously a bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you that anytime you're watching any type of company specific content, whatever it might be, just approach it with a dose of skepticism and treat it as market. It doesn't mean you should throw it out the window, because otherwise I might have to get a real job. But it means that you should treat it, you should just approach it with a dose of skepticism. As I said, treat it as marketing and know that it is. And unfortunately, I'm not a magician. The guests on here are not psychics, and some of the CEOs are oftentimes even normal people. So we don't possess any superior knowledge about what's going to go up, what's going to go down, or what's going to go in circles and back and forth and start jumping around. We don't know. And unfortunately, try as I may, I am not always going to catch all red flags or all challenges with the companies or all shenanigans, whatever it might be. We call this show the CEO barbecue because it's meant to grill the CEO. That is true. And although you shouldn't tell my wife, I'm not flawless. Okay. Matter of fact, I still have no idea what I'm doing. And I've only had facial hair for, well, basically a couple of hours at this point. So I also lack the experience. And you should be aware of that fact that I'm going to try to ask the tough questions, but I'm not going to catch them all. This is not Pokemon. This all is to say that you should not blindly trust me or anybody else on the internet. That's what the warning is about. In addition, no guarantees are going to be made here besides one. And that is that there will be forward-looking statements in these conversations. Those are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors, both within and outside of the company's control. Be aware of that, please. Be aware of the inherent risk to investing, please. And be aware of the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining industry. And also, please talk to someone who's proven to know what they're doing and talking about, but just a professional investment advisor, someone who's got a degree and is licensed to give advice, as none of us in this video are. As well as, of course, do more research before taking any decisions in the end by visiting sitterplus.ca, where you find the company's official findings. If you don't do that, you're highly likely to lose your money. Again, there's disclaimers on your screen right now. If you don't enjoy losing money, read them and be careful out there. With all that said, though, I'm going to kick off the CEO interviews by traveling to Quebec, where I won't be looking for maple syrup, although 70% of the world's production of maple syrup happens here. But instead, I'll be looking for high-grade gold, though. And luckily, I won't be doing that alone, as I have no idea what I am doing. So I'll be joined by John Florick to help me out. He's the CEO of Emperor Metals. The company is listed as AUOZ, so that's gold ounce. Get it? So AUOZ on the CSE in Canada. There's about an average of about 200,000 shares trading each day. And I see a 52-week high of 17 cents and a 52-week low of 5 cents, with a market cap of about $9 million and roughly 103 million shares outstanding. Today, this is an 8-cent stock. In addition, there are 31.5 million warrants with an average price of 23 cents and an average remaining life of 1.5 years, and close to 9 million options with an average price of 14 cents and 2.5 years of average remaining life. Luckily, it's not 2.5 million years, leaving us with 143.5 million fully diluted shares. Large shareholders include management themselves. They own about 13% of the company. Rob McEwen owns 8% of the company after a recent investment of about $1 million. And an estimated 29% is owned by high net worth individuals, as well as a small portion, so that'd be roughly 3%, is owned by the property vendor, leaving about half, or 47% to be specific, in the hands of retail investors. The last officially filed financial statement, which shows me the numbers as of April 30, 2024, has over $3 million in current assets, most of which, over $3 million actually, to be specific, was cash and cash equivalents at the time of this report, with, of course, some prepaid expenses, some tax receivables, and some account receivables on top of that as well. Total liabilities sat at just about $400,000, most of which was made up by a flow-through share premium liability, so not actually debt. A current portion of the lease liabilities on here as well, about $100,000 worth of account payables and accrued liabilities and so on. but no long-term debt. For the 3 months that ended on April 30 this year, the company recorded about $1 million on what I would call administrative expenses, but almost half of that, so $474,000 was share-based compensation. So the out-of-pocket cost was a little bit less than that, and it came up to an average of about $200,000 a month. Over half of that money, so 54% to be specific, was spent on advertising and promotional activities. Over a third, actually it's close to 40%, was spent on management fees, consulting fees, and professional fees, with various smaller expenses making up the remaining 6 or so percent. As to exploration costs, Emperor capitalizes theirs. So if you want to see it, you have to go to note 5 in the financial statements, and they show just about $160,000 for that entire period, mostly in the form of geologist fees and so on. But again, we're talking about the period of essentially February, March, and April, and the project is again in Quebec. So not having done much exploration in that period isn't all that exceptional, but it does mean that the administration to exploration ratio might look out of balance right now. So currently it's sitting at 4-1, meaning about 80% of the total spent went into administration. That might not be representative going forward, especially provided that Emperor started an 8,000 meter drill program in May of this year, which I'll tell you more about here in a second. As always, though, please understand that this financial statement is nothing more than a snapshot in time. In this case, it is specifically the end of April of this year, but it simply shows you what the finances looked like on that exact date and nothing more. Finances, though, as I like saying, are a fluid thing, and math is also hard, especially if you're me, so I might be making mistakes in my reading of them. It is imperative for you that by the time you're watching this, you go to the company's website as well as setterplus.ca to look at the most up-to-date numbers yourself and make sure you're getting the full picture. For Emperor, that full picture is fully focused on Quebec, southwestern Quebec to be specific, so essentially on the border with Ontario or close to it, where the Duquesne or Duquesne, if you want to be American about it, project is located, which, if you're paying attention, you already know that this is the Abitibi Greenstone Belt. Duquesne has a small historical inferred resource on it showing just over 700,000 ounces of gold, with an average grade of about 5.5 grams of gold and an average thickness of just over 5.5 meters. The idea is to grow it, but not only grow this historic resource, but to show the potential for an open pit on top of the higher grade underground resource that I just told you about, which, by the way, was calculated in 2011, so we should treat it as historic. Again, they're doing that work or trying to grow the ounces by re-assaying about 8,000 meters of core, but they're also, as mentioned, drilling 8,000 meters themselves this year, which is actually following up on about 8,500 meters of drilling that was completed last year. Drilling those 8,000 meters this year, by the way, started in May, as I just mentioned, and by July, they had a news release. They had completed about a third of that, roughly 2,500 meters, with the results now pending and all of that. And I assume since then, there has been more drilling completed. If I was to go off the last news release, it is specifically focusing about a kilometer eastward from the conceptual open pit motto and toward the NIP zone, NIP zone, where they've tested an IP resistivity anomaly, and so concentrating on the more near-surface mineralization there. Again, results here are pending, but Emperor plans to come out with a mineral resource update by Q1 or in Q1 of 2025, which is aggressive, and I hope we'll talk about that later on. It's about 6 months from now or something along those lines. So this will be a big part of my conversation here with John later on, especially because I've also been seeing AI mentioned multiple times in their presentation. So they're using essentially data and machine learning to come up with a 3D model, and then a better resource, better targets, and figure out what's really going on under the ground there. Because the company believes that about half of the historic core, especially the one that was coming from the first 500 meters, so essentially from surface to 500 meters of deep of drilling historically, was not properly assayed because the previous operators didn't really believe the project housed any open pit potential. So again, Emperor re-assayed 2,500 meters of that historic core last year, and they'll be re-assaying some more of it this year, potentially next year, which is again something we can talk about later on. But John, this is a good point for me to start shutting up because this is your first time on the program. So this is the CEO barbecue after all. And well, first of all, thank you for taking the time to talk to me. But obligatory questions here are in order, starting with the viewer's favorite. Why should I trust you with my money?
Why should you trust me with your money? Well, because we have this high-grade gold deposit. Gold is you know, has increased significantly recently. Previous operators on this property, they really liked the property, but, they had to drop it in 2011 because there were some issues with raising money. So gold has increased by like 150% since then.
Hmm.
This property still, it's a legitimate deposit. And so what we're trying to do is well, first of all, it was somewhat obscure when we picked up this deposit. And we used, as you mentioned, we used artificial intelligence to identify it and illuminate the exploration potential. And we did that by creating these really quick 3D models. And that helped us really understand the growth potential here. And so, I mean, management has put a lot of their own money into it, myself included. I got all my shares at 10 cents, so I'm basically underwater right now. So I'm not there for, 15 cents or 20 cents. I'm kind of in here for like 50, $1 plus, right? So if I'm putting my money into it, it shows my commitment to the company. And I hope that people can digest, what the value proposition is here for this project, the Duquesne West Gold Project.
Hmm. And hopefully that's exactly what we're going to be talking about here today. That really is the reason, that last part that you just told me about, you owning shares, buying them at 10 cents. That's what I'm asking. What I ask you, why should I trust you with my money? It's essentially the skin in the game question. It's insider ownership is noted at 13%, as I mentioned earlier. How much of that is you personally? How significant is this investment to you as a person?
Yeah, it's pretty significant. I'm not necessarily a high net worth individual. So well, let me tell you a little bit about myself.
Please
I'm a
do.
geologist and I have about 35 years in the industry. First 15 years was in exploration and subsequent 15 years was in production. So I worked for companies like BHP, Barrick, Tech. Um, Most recently, I was up at Detour Lake Gold. I was chief geologist up there. That was subsequently bought out by Crook and Lake and Anico Eagle. We can get into that later. But yeah, so my production was at the open pit up at Detour Lake, but I also spent like 6-7 years at Hemlo Gold Mines underground as senior geologist. There we won, Developer of the Year for Northwestern Ontario. So I have a track record of taking deposits and making them viable, because at Hemlo, the deposit there was supposed to close down in 2012. I arrived in 2006. People asked me, why was I going to a mine that was going to be shutting down? Well, number one, I wanted to see the historical, Hemlo gold mine. And I always know that when you look at gold deposits, there's always a lot more opportunity because we know that gold falls out of solution in that region. And so there's some sort of chemistry that's going on that allows such a huge anomaly. Like Hemlo was like 25, 30 million ounces. It's the most amount of gold and the shortest amount of real estate basically in the world. But anyways, we went down there. There was a new section of the mine that they were mining because they didn't really understand the geology. So the geology department and my team, we helped the engineers reconstruct and reconfigure the whole mine. And, we got Northwest, Developer of the Year for Northwestern Ontario. And then up at Detour Lake Gold, that success story there. Me and my team built these models that really helped, with the progression of that deposit, first by, Crook and Lake Gold, taking out Detour Lake, and then subsequently Anico Eagle seeing the generational mine that Crook and Lake would become, and taking out the entirety of Crook and Lake, including some of their other high-grade assets like Fosterville and Macassa. So I own close to 3 million shares myself. And my partners in management own very similar, plus or minus 1 million there. So we all have skin in the game. We're all committed to this project. We've added and contributed more money recently in recent financings. So yeah, none of us has sold. And because we want to see this thing through. We think this is a winner, especially with elevated gold prices. And the macro economy that's in front of us, gold has the potential to go a lot higher if you talk to some experts in the space.
So you used to work with Gerald Panatton.
Oh, fantastic. Yeah. Gerald was great guy.
Yeah.
And he put that project together. It's amazing, right? Because a lot of people thought Detour Lake Gold, well, Detour Lake tried to sell this to Barrick or what other companies out there, and they thought the deposit was a dog. And he had the fortitude to raise $1 billion to get it constructed. And the naysayers were wrong. I mean, he built this thing and the vision was correct. And now it's like an Eco's like flagship property. So it's huge, right?
Yeah. Yeah, exactly. And thank you for the overview of how many shares you own and so on and so forth. And I'm essentially asking these questions basically to understand how aligned you are with shareholders. But so is there maybe how incentivized really you are to do a good job here, but is there maybe a competing incentive for you where you own, like you personally own a royalty on the project, or someone within your family owns a royalty on the project, or something along those lines?
No, I have no royalty on the project.
Is there so nothing else? I mean, like you don't own a helicopter company or a service company or something else that's servicing the company right now?
No, I have my own independent consultant company called Apical Resources. And that's how I bill into the company and stuff like that, like a lot of people in the space.
Yeah, that's fair.
About it.
Yeah. Good. Well, that's exactly what I'm looking at. I call this my smell test. Let's figure out how you're trying to make shareholders and yourself money on this deal, though. You're currently drilling what I would guess are the last meters of your 8,000 meter drill program, or is that completed?
Yeah. So like last week, we just wrapped it up. We're done drilling, but we're still sampling historical core. So all 8,000 meters have been drilled. It's something like 8,127 meters, I think we ended up with at the end of the year. And we're probably 75% done with our historical core assaying. The target was 8,000 meters. We will probably go a little bit over on that because we're encountering a lot of interesting stuff. We want to send that to the lab. It's been a long, arduous process to unstack, restack, and cut and sample and for the historical core, but it was very cheap. Like our all-in cost this year, if you look at the 16,000 meters that I just kind of outlined there, it was going to be like $200 a meter or less. So very, very efficient use of money. Like you're an accountant. So one thing is, this project has about 120,000 meters drilled on it. We picked it up with 100,000 meters, through drilling and reassaying core. We're about at 120 something. And you look at projects of similar magnitude, because as you mentioned earlier in this conversation, we're looking at a large scale open pit above a high grade gold deposit. And if you look at those type of projects, traditionally they're 300 to 600,000 meters of drilling. So we're still in the infancy, and we already have a good historical mineral resource of 727,000 ounces at pretty good grade. And we were the first one to conceptualize this big open pit above it. So yeah, we're quite excited about, where we're going here.
What do you think the main unanswered questions are that you think after re-assaying the historic core, but also assaying your own core that you just pulled out of the ground? After you do that, what do you think the answers are going to be that you get, or like what are you going for?
Yeah, so I mean, last year, we were drilling the high grade underground portion, and what we ended up doing is we're the first company to sample the entire core. So in this district, if you look at the history, like you said, we're in the southern Abitibi. We actually straddle the Porcupine Desert Fault. If people ask me, like, how far are you close to infrastructure, I say 0 kilometers because we're right on the highway. But we're in a kind of remote part of the district where that we basically receive little attention compared to, like, basically Timmins and Rouen and Val-d'Or and Kirkland Lake. So now we're starting to explore lateral to some of these camps along this plumbing system that introduced gold into the district. And so that's where we're located. And like I said before, another part of that is we are very cheap in our exploration, because if you drilled an additional 100,000 meters, the average cost for what all-in cost per meter is about 400, 450 for some of these other plays. Sometimes they go up to 600, 800, depending on how far north you are. This is talking about the proximity to all this infrastructure. You drill 100,000 meters, that's like a $20 million savings, and that could go into the ground. So that's one of the parts that we like about the project too. And also, we're located in Quebec, and it's been a tough market recently, and a lot of the money that we raised was flow through money. And Quebec has a program where you get 130% to write off against your taxes. So it really helps fund these junior exploration companies in times of difficulty in the market. And so we've been able to use some flow through money last year on our campaign, and all of our subscribers in that flow through were from outside of Quebec. So basically we could, you were able to claim that additional 30% and get hard dollars kicked back to you from the government in Quebec after you're on. So that's huge. So we'll get a check of like another $500,000 from the Quebec government from our last year's drilling program. And so that's a great use of funds, right? We have kickbacks from the Quebec government when needed. And our costs are cheap.
That's something, well, a lot of things that I want to touch upon there, especially also you being close to infrastructure in the town that you're close to. So we're going to talk about that later on in the conversation. But also another good point was that you're the first one to re-assay that core, or really look at it from the open pit potential perspective. And I want to go further on this because, again, you're not the first one to look at this project to begin with. A lot of the stuff in the Abitibi has already been in public companies at one stage or another. Maybe not all of it, but a good chunk of it. What do you think the previous operators missed? Like, why not focus on that open pit? How can anyone miss it?
Well, yeah, it's very easy to miss if you don't sample the entire core. So we sampled the entire core in our 2023 drilling program, and the host rock that contained these high-grade mineralized lenses, there's about 8 of them stacked up on top of each other. But we were getting intercepts like 25 meters of 1.69, 17 meters of 0.45, or 20 meters of 0.8. So this subgram material, that was my point previously, is that, you can't really envision something like that if you don't see that the host rock also contains ounces, because when you put these open pits together, you really want to grab those incremental ounces in the host rock, that subgram material, because it reduces the stripping ratios and stuff and improves the economics overall. We did some pit optimizations on this project to create, an ultimate pit. Well, we have phase 1, phase 2, and an ultimate pit. What you see in our corporate presentation is phase 1 and the ultimate pit. The ultimate pit is economic at today's prices, and we're not even accounting for the incremental ounces that would be contained in the host rock. So part of the 2024 drilling program is to, what we're working towards, Antonio, is at the end of our 2024 drilling campaign and all our assays, we're going to publish an updated mineral resource estimate. And we're going to include those incremental ounces. So a lot of our drilling this year is strategic. It's about really understanding some of that low-grade bulk tonnage stuff coupled with the high-grade lenses that we have in the open pit. But we're also, like this open pit is right now, about 1.8 kilometers long by 800 meters wide, down to 400 meters depth during our pit optimization studies. But we're seeing stuff further east. So we want to explore further east, like 1.1 kilometers further east, we have the NIP zone. When we have other satellite pits from a pit optimization study that was actually constructed east of the main pit. But it's looking at the nip zone, bringing that into our model and understanding, can we expand this pit a further kilometer east, as well as the eastern extent is shallower. It's not down to 400 meters. It might be down to like 150 meters. Try to deepen that. We see indications that we can. And so it's really about trying to understand the definition of what this open pit may look like. And you can't do a lot with 8,000 meters, but we gave it our best attempt because, like I said, you need something like, at least 300 to 600,000 meters to define these type of projects.
And it's good to hear that you're still confident on that timeline, Q1 2025. Are you guiding anything in terms of size? Like how big does your gut feel tell you this thing can get?
Well, like I said, that was the plan for the 2024 program. That was our objective, is to try to, put out there what is the extent of the dimensions of this pit. So that was our main strategy for this year. And at the end of the day, if we could put a couple million ounces in the open pit and then we have the underground, the vision is that from a kilometer to surface, and you mine both underground and open pit in that range, we could potentially put together 3+ million ounces. And what's really neat about this district, if you look east to us and west to us, a lot of these mines go down pretty deep. Like LaRon, just next to us, is down 3 kilometers. These deposits, they basically are, 3 to 1. So the horizontal extent is basically, they're 3 times deeper than they are horizontal. Yeah. And so if you have 3 million ounces, so what is the potential for this deposit? That's some of the questions that we ask ourselves as geologists. Well, if this thing looks like it has legs, some of our good, grade time thickness intercepts are pretty deep. And, you just multiply what you might be able to cobble together and times it by 2 or 3. So maybe it has a 9 million ounce potential, 9 to 10 million ounce potential. I don't know. But a lot of these deposits in the region, they started off at 1 million ounces and they ended up closing at like 10 million ounces. So it's a really prolific district. And that's one thing that we would like to highlight to investors, that, there's been 200 million ounces that have been produced in this district. And that's like 90% of the gold that came out of Canada came from this district. So the best place to reduce your risk in exploration is to basically explore and at the margins of known deposits and keep adding these ounces. It's proven successful in this district, so why couldn't we do it?
That's fair. Head frames and shadows and such.
Exactly.
But you're not, essentially what I'm asking here, John, is are you guiding anything, are you communicating anything to the market before the MRE of like a range that you think what the MRE could be?
Yeah. So I guess the key thing is, you mentioned that we have a lot of retail investors. So one of the key things is to get this over the 1 million ounce hurdle. Okay. And if you think about the historical mineral resource, that was done at $960 gold. Okay. And they only looked at it from an underground perspective. So when they looked at it from an underground perspective, they looked at it, 3 grams per ton cutoff grade. They capped it at 30 grams per ton, and they had it, an average thickness had to be over 2.5 meters. We did some stope optimization studies on that, and their estimate seems to be pretty accurate. That's what we came back with, very similar results, and we did that in the 3D space. They did that using polygonal methodology. So we used that. We did that in 3D space. But now you have to realize gold is up at $2,500 gold. And more importantly, when you look at an open pit environment, you can mine an order of magnitude less grade. So instead of mining 3 grams per ton, you can mine 0.3 grams per ton. So you could add ounces more rapidly in an open pit environment than you can in an underground environment, especially when you identified that the host rock contains this low-grade bulk tonnage that no one's ever really taken into account. When we look at our historical core that we're sampling currently, all the rocks are rusty. Look at our corporate presentation. It's crazy. If you're an open pit geologist, you would want to sample that material and send it to the lab. So yeah, that's our hurdle, is to get past the 1 million ounce. So the institutions and some of the more, equity, significant strategic partners that might want to take an equity stake in our company, they usually look for that 1 million ounce hurdle.
Yeah. That's exactly what I was looking for. And hopefully you do get there. In the meantime, you're going to be announcing results, though, from this drilling and from the re-assaying of the core. When do you think you're going to have some news?
Very soon. So in the next couple of weeks, the news store will start flowing. I got about 10 to 15% of the drilling back. I'm just trying to get a couple holes complete before I put the press release out, because it's kind of sporadic the way they cut. So once I get, like 2 or 3 holes complete, we had 19 drill holes. So we're going to probably, our first press release will cover 3 or 4 drill holes. And then we'll have subsequent press releases with the same amount of drill holes. We'll just keep adding to that as the results come in.
So it's going to be
the investors up to date.
5 to 6 news releases from this drilling alone over the next couple of months.
Yes.
That's fair. Okay. Continuity, John, is often a challenge with higher grade deposits. And you had some grades as high as 16 grams and as low as almost 1.5 grams from your last year's drilling. Is this upcoming news flow or these upcoming news releases, are they going to shine more light on how the continuity is for you and how you're going to deal with it?
Yeah, I mean, if you look at what's really neat about this deposit, Antonio, is that it's replacement style primarily in the main zone. So this is not a quartz vein that pinches and swells and has high nuggety gold. We have, this beautiful rock. The original protolith, original lithology of the rock is obliterated. You can't even tell that in spots that it's a mafic volcanus because it's replaced with anchorite, cerussite and quartz, flooding. And the grade is pretty homogeneous, throughout the interval. So that's a beautiful thing for a miner, right? You don't have these quartz veins that are nuggety and pinching and swelling, and they're hard to estimate. This deposit is a little bit easier than that. So it's a miner's dream. It gives a lot more security to mining a replacement style gold deposit, albeit they're a little lower grade than some of these like Newfound Gold or Great Bear and all that stuff. But, it's there. It's in a tier 1 district. 5 grams per ton is pretty reasonable. You can make a lot of money on it, especially at $2,500 gold. When you look at the 1 gram per ton stuff, you have to take all that into context. This is the problem. Like that might have been in the host rock. That 1 gram per ton is huge because that's extra ounces, like in an open pit that nobody would have mined before. Or if you look at Goldex mine in the district, they're mining an average grade of 1.62 grams per ton. And like I said, some of our intercepts that nobody would have sampled before was 25 meters or 1.69 grams per ton. So we potentially have low-grade bulk tonnage underground mining below the open pit as well. So there's multiple scenarios to grow ounces on this deposits. The open pit, high-grade underground gold, low-grade bulk tonnage gold underground. So yeah, we're quite excited to be exploring this property. And we see a lot of multiple ways to add ounces here.
There's multiple avenues for you to take exploration on the back of the MRE too. Do you think it's getting more complicated given the presence of 2, open pit and underground style mineralization?
Is it getting complicated? What do you mean by that?
Well, targeting, coming up with targets. What are you going to be using? It's a part of the drilling that you're doing right now is based on IP. Or are you going to do more geophysics, geochem? Do you have to go back to trenching? How are you gonna approach exploration after the MRE?
Yeah, I mean, we have plenty of drill targets right now, and it's just based on geology and mineralization. And we built these AI models that help guide our targeting. So, like I said, the low grade stuff might be in the host rock. Investors not excited about it, but we are because it adds us. But those high grade lenses are really high grade, and you can see continuity within these plunge lines, and we're tackling. So there's no reason to do, we might do the gap zone between the nip zone and the margins of the ultimate pit that we show. It's a conceptual open pit. We might do some trenching and some additional IP resistivity. For instance, at nip zone, there was some downhole IP resistivity, and we targeted some of these anomalies that were untested. So we drilled it, we hit some mineralization. We're just waiting for assay results to come back, because there's, like any of these gold deposits, there's multiple events of mineralization, and you want to be sure that the sulfide mineralization that you're seeing is related to the gold endowment. So yeah, there's some overlap and stuff going on this property, but in general, the deposit is very low sulfide when we're in the gold deposit itself. And it's like you probably get 1 or 2 grams per ton for every percent pyrite. So it's very, very low sulfide.
Okay. So, well, that leads me to another part of what I wanted to talk about. But metallurgy, you're going to have to do some met work in the meantime too, but you don't expect that to be too challenging?
No, I don't think so. We sent some samples out. So do some benchtop cyanide leaching on them and stuff and see how they turn out. We don't have the results back yet, but that should be an upcoming news release.
Oh, so some met work in the upcoming news release as well, or are you going to do a separate NR for that?
Yeah, it'll be a separate news release once we get the results back.
Okay.
What we did was, as we're drilling and we're getting some of this material, we're collecting it, and then we're sending it in for studies to see what the recovery would be.
Yeah, that's fair. John, talk to me a little bit more about what you just mentioned, the AI, and as I mentioned earlier, you're using that for your exploration program. What exactly are you doing, and what are you getting out of it? Essentially, talk to me about the cost benefit analysis here, and why do you think it's worth using it?
Well, yeah, what's great about AI. It basically improves productivity. So when we first picked up this deposit, like I said, we had about 100,000 meters of drilling. And within a short time frame, we would build these intricate models and a first ever geological model on the property using AI. Now, that would have taken years to build conventionally, with all the digitization and stuff involved. We did this in a couple months. So it was like having a team of like 10 geologists working on this project at record pace instead of dragging it out. I mean, you see some projects, they're 500,000 meters out or 300,000 meters out. They still don't have a geological model. We had one almost since inception. No one's ever looked at the geology in relation to the mineralization on this property except us, because we're able to synthesize the database. And, my experience as a geologist allows me to go into the database with some of my partners, and we make hard decisions on how to categorize 150 different rock types. And now there's not that many rock types on this property, but depending on who's logging, and there's been about 9 different explorers plus 9 on this property. This deposit was discovered in 1940. So we had to make decisions and try to put them into some sort of geological framework that we could model. And then we have a great geological model and helps us identify the targeting. So another thing is basically that accelerates our decision making. So we're able to make decisions fast. So what you've seen on this project is we basically picked it up in January of 2023. We're working on the deal right through to Christmas in 2022. And so we started work in 2023. So like in a year and a half, we built the first ever geological model, mineralized model, and now conceptual model that no one's ever thought about before. We did that all in a year and a half. Sometimes I think our share price is lower because we were moving too fast, because that's a lot to digest in like a year and a half for a new company to just come in and pick up a project. And so there's probably some like, well, what's going on here? But we're using AI, and hopefully this impacts the bottom line. We don't have to hire all these people. We're pretty tight when it comes to our cost expenditures. So we're trying to get most of the money that we raise into the ground.
Talk to me about the money side of things. Like, how much is AI costing you versus how much would it cost you if you had to have that full team that you just taught me about?
Oh, geez. Geez, AI is really inexpensive if you get the right people working it.
Mm,
We might spend $100,000 on AI technology throughout the year, and you would spend to get these models, you'd probably spend a couple million. So, people, you have to hire a team of people designing, digitizing, takes a lot of time. And what's nice about AI, Antonio, is I could have 3 or 4 different models. Once I got it all set up, and every time I drill hole, I could remodel it overnight. So I can just press go on the computer, and it reconfigures everything. So it helps generate new targets based upon your last bit of drilling.
mm,
So you don't have to sit there, okay, let's stop drilling. And the geologists have to get down and remodel for another 6, 7 months before you start another drilling program. It allows you to, and you might have 5 different working models, and a lot of mines would just have 1 or 2, maybe just one. Actually, that's pretty much the standard. We could have 3 or 4, and whatever models behaving best, that's the model that we follow, and that's the model that we improve, and we can discard some of those other concepts because you can play with the parameters in AI. So it really depends on the geologist and the team to have it work effectively. Now, as far as I'm aware, myself and my team around me, we're one of the few who's actually used AI successfully because we were using it. The infancy of using AI was up at Detour Lake Gold.
mm.
The foundational way of how applying to use geology in AI was started there for me and my team. And we fed that stuff through the mill, and we started seeing 20% increase in gold ounces going through the mill. So before that, Detour Lake Gold was pretty flat in its reconciliation. They weren't making any money. Once we published that, new model that me and my team created, we started seeing 20% more gold going through the mill, which equated at the time to about $150 million per year for life of mine. That's a 40-year mine life. Right now, I did a calculation at $2,500 gold. That's an additional revenue of $350 million of additional revenue going through the mill with that new model. And they're still doing work, hopefully, on improving the characteristics and the subtleties of these models using AI, because when you do that, you can make subdomains and improve the economics even more. You just have to collect the right information for the computer, and we're doing that at Duquesne West. Every single inch of core is sampled and assayed. We do multi-element on every single inch of core, and we assay it. So we can complete our database, and we can create more sophisticated models to improve economics in the future.
Hmm.
And sorry.
No, go ahead.
Oh, no. Yeah, so this is all impacting, the savings that we're achieving. There's a huge impact to our business because we don't have to spend as much money when we use AI. That's the point. Sorry for the long-winded explanation.
I appreciate that. That's the kind of things that I like getting an insight into, because typically on news releases, you just kind of see 1 or 2 lines of, oh, it's really effective and it's cost efficient and whatnot, but kind of getting enough understanding of where you're coming from and that you know what you're doing and you're not just using it as a catchphrase to attract attention to your news releases. That's what this is all about. So I appreciate you doing that overview. Talking about money, how much money are you going to have left in the bank after this drill program is completed and everything is news released?
Yeah, so in the spring, we were going into the drilling season with $4 million in the bank. Our drilling program and historical assay is estimated at 3 million. And so we have right now, we probably have about $2 million in the bank. $1 million that is accounted for accruals, probably bills to be coming in. And so we'll have under $1 million as we approach December.
Okay. So
So yeah, we want to do more drilling. So one of the things is we would potentially like to do a winter drilling program. Depends on the market. I don't want to dilute this company at very, very low prices. Right now, like you said, we're at 8 cents. We're as high as 18 cents. We should be 18 cents and higher, in my opinion, especially with the gold price rise. And since we picked up this property, when we picked up the property, we were at 20 cents. Gold's risen by $800 and we're down to 10 cents. So there's kind of a crazy thing going on there in the market. But we feel as though, we look at comparables, their market cap is $50 to $200 million. Ours is at 10 million. So we see a lot of growth potential here. And so we just want to be careful about when we finance and what we're financing. We might raise some flow through this year to start a small winter drilling program and then refinance and do some more financing in basically 2025, like in February. Because there are areas that we want to tackle that you can't get access to them because they're kind of swampy and you have to wait till winter. So a winter drill program would be ideal for us.
That does make sense. And you have access to flow through. It's Quebec, so it's higher flow through. You mentioned your drill costs were low. What are you paying per meter up there?
Last year was about $250 all in cost. This year it's going to be 200 or less because we're doing a lot more historical core sampling. So we're included that in the cost per meter because that's 16,000 meters. 8,000 of it you don't have to drill. You just go back and it's arduous work, but we're getting there. So we're at about 200 this year, probably.
Fair. Yeah. I also did notice you spoke about, you said you want to keep your costs lower, have more money going into the ground. I did notice that your G&A has gone up significantly on a year-on-year basis, mostly due to marketing and partly due to management compensation. Why did you decide to spend more money now? And is the G&A now at a spot where you'd like to keep it, or do you foresee it going up more?
Yeah, so we were hoping to get the share price higher. So we know that promotion is highly effective in this business. And we saw gold price going up. And we were trying to be relevant because we were, like I said, we were just basically in people's, people didn't really know who we were until the beginning of 2023 when we got our flagship property, this property here at Duquesne West Gold Deposit in Quebec. So we had to spend some to get people aware of who we are. And we were probably a little aggressive in the marketing because the gold price was going up, and we felt that, this is a great opportunity to create awareness and to get a lot of people aware of who we are so we can achieve a higher market capitalization. So, because when we look at our peers that are more well-known, they're significantly higher than us. So we're just trying to accelerate, I guess, our market capitalization of where it should be. Now, I don't have an AI program to accelerate it. It's a hard knocks working with individual newsletter writers, retailers and IR people to help create that awareness for the story. So it costs some money, especially in the initial. I like to probably keep it at, the range should be about 10 to 20%, right? I'd like to try to keep it in that range in the future. But there was definitely a need to spend a little bit more than that range in the first 2 years, without question.
Okay, so for those 2 years are what, this year and next year?
Well, it was 2023 and 2024.
2023, 2024, fine. So in 2025, essentially, you're expecting a lower marketing cost. What do you think? I mean, a G&A last quarter, as I said, was about 200 grand a month. Where do you want to land at once you've scaled back on marketing?
Yeah, I think that G&A should be about under 100, right? So between $60,000 and $100,000. That's where we want. That's our burn rate. I mean, if we stopped our marketing and stuff like that, our burn rate is pretty low. So we could go into a very low cost per month if we wanted to put this thing on care and maintenance, but we're not going to do that. We're going to continue with what we're doing. And it depends. Like if the market is hot, we want to get the word out there. There's a definite benefit. If you keep in mind that $200 per meter when the average cost of another drill program just further north of us is 400. The cost savings that we have because of our low cost per drill allows us the opportunity to spend a little bit more on marketing.
That's right.
And it makes sense because we're no worse or no better than any other well-run junior company. And so I feel confident that we're doing the right things, and hopefully we're moving forward. We achieve this higher market capitalization.
You're right, by the way, when you talk about G&A and you say if you scale back marketing was about 54% of that 200 grand that I said. So essentially, if you cut that, you're under 100 grand already. So fair point on that. Once you figure out the money, or when you have the money figured out, and you said follow through as well and all that, how's the relationship with the First Nations? That's kind of the next thing that I'm thinking about here on my list. Can you go and do all the work that you're hoping to do in order to get out to the MRE, but also the further stages on the Lausanne curve?
Yeah, Quebec is advanced. They have this new permitting process. Everything has to go through the First Nations desk. So they have not denied it. We've reached out to them. We met with them a couple of times. Our exploration manager, when he's up there, he goes visit them. There's no issues. All our drilling permits get approved by the First Nations that are relevant for the area. And no one's had any issues on this property that I know of, going way back with the First Nations. So Quebec has generally a better First Nations environment, I think, than other provinces. But we make sure that we communicate with them. And, that's the level of standard that I'd like to implement. When I ran other junior companies, there was no MOU basically attached to some projects I worked on. But, I operated under the spirit of an MOU. I donated to their youth camps and stuff like that. So I always make sure that I'm operating under some sort of an agreement, even if it doesn't exist, that keeps the First Nations in the loop and relevant.
It is close to the city of Du Parquet, if I understand correctly. How close is it to the town?
Yeah, Du Parquet is, I think it's probably 8 kilometers away or 5 kilometers. It's a small town. I don't even know if it breaks 1,000 people, so it's not really a city.
Okay.
The city that Wuhan, Naranda, they have about, I would say, about 50,000 people or more. And so that is the major city in the area, and that's about a half hour south of us.
But it's not what I was getting at with Du Parquet is that is it close enough that it might pose any challenges for your exploration programs, but 8 kilometers is far enough that I assume it doesn't.
Yeah, I sat down with the mayor this month. I went to his office, visited the town hall, talked to the mayor about our projects. They're excited about it because a lot of their guys are traveling, fly in, fly out camps, or traveling 2 hours one way to go to a mine to work. And to be 8 kilometers away, be home for lunch, if you want to be, is a great opportunity for them. It's far away from town that it's not going to pose any kind of issues. Now, First Mining has a project right in the center of town, building this big open pit, and the town is pretty receptive. I mean, there's some mines. The town is there because of the mines. There's some mines right in the center of town, and they had some bad practices in the past, and you can see some of the lakes are contaminated. But First Mining would go in there and they basically can clean up all that contamination if they made this big open pit. So that's one of the advantages. Even at Goldex, Anico, there was a tail ends pond that was and they processed all that and they fixed up a Superfund site basically. So there's a case to be made that mining companies are going into districts and cleaning up the environment, and it's true, they are. And so it makes mining is becoming green, and this is one of the green stories, right? Yeah. So, but between us, First Mining, and now even just a little bit further west of us is old Moneta's property, which is now Stellar. Nighthawk and Moneta merged. And between all those three properties, there's like 20 million undeveloped ounces. In the middle of that is the whole Holloway mine. They have a big tailings dam, and they have a mill. So I see this as a section of the district that is in development. The gold price is at $2,500 gold, and you have 20 million undeveloped ounces in a tier 1 district in close proximity to all these mills and tailings dams. It's a dream. So we're quite excited to be part of this development story.
So essentially, you have an idea of how you're going to deal with the money. You're okay with the community. You have a plan, and you're going to have a bunch of news releases in the meantime. What is happening in the meantime? Do you have any? You did a financing. Do you have a free trading date coming up between now and the end of the year?
A free trade-in date?
Yeah. So 4 months plus 1 day. When you do a financing, and then 4 months later, the shares are free trading. So,
yeah. So, what was the question? I'm sorry,
whether you have one coming up anytime soon.
Oh yeah, so we're gonna. I think that there's some warrants, not warrants, but some of the shares. Well, the problem with if you look at yesterday's, we traded 4 million shares. So that was some of these flow-through funds, dropping some of their shares. And so we found people to help back us. So the stock price stayed relatively stable, but we had some people that want to sell some of the shares to previous financings. So, yeah, I mean, we're trying to manage. We have, like I said, Alex Horsley is my business partner. He's a very experienced investor relation person, and myself, we have contacts in the industry, and we're able to find, like you said, we have quite a few high net worth investors in this company. They see the value. Like Rob McEwen is in on this. He sees the vision, and we have a aligned strategy for the district. So he did his due diligence. He doesn't just come into the opportunities like this. He has right along the same trend along that straddles the Porcupine Duster Fault. He also has his mind, right? So yeah, he's fully invested and likes the story and what we're doing.
I think also last time you raised money, I'm just trying to pull it up here and have a look at it right now. It was in March, at the end of March. So, that paper has come free trading. And over the summer, that's I do see the volume spike that you had yesterday. Who else was in on that financing, by the way, the 2.5 million? Do you have a kind of a breakdown and of who bought in, or how many people bought in, and where that money ended up?
Yeah, most of it was retail investors. So we don't have any institutions really. Canaccord was our biggest supporter, but they sell too, right? And so most of it is, high net worth investors and some retail. And a lot of my high net worth investors, they don't really want their name known. So I don't really publicize it. Rob McEwen, he gave us permission to use his name. So I could use his name. But yeah, just people that we know, in the industry that like us in our story, because we're part of the metals group. And, the metals group, we have John Williamson in the background. He's the chairman of the board, and he's a serial successful geologist. He's at 20-something different companies. Most recently, North Country Gold was kind of got his big win with Committee Bay. Then Kamenak, if you remember that, eventually sold to Goldcorp. Yep. And then his other two projects that he's involved with that are most notable, Benchmark Thesis, and Founders down in Suriname. They're both doing quite well. So this guy, he has an knack for identifying potential winners and projects that ultimately get sold out or go into production. So we have a network of people. That's the benefit. This group, this metals group, they've raised probably over $1 billion in financing in their careers. So yeah, we're associated with a very good group of successful people.
Yeah, I know Ewan and Colin well. They've done very well over the recent over the recent months. I just spoke to you and actually at Beaver
Yeah.
Creek, but before that, I spoke to him about the PEA as well. So they have been doing well. The group is doing well as well. So that's a good point. I'm kind of going through the list here. I think I've asked you a lot of these things. Maybe it'd be a good idea to do kind of a geological deep dive in the future. I'm always interested in kind of figuring out the specifics of your part of the land package on the Abitibi. As you said, lithology is not too complicated, stratigraphically not too challenged, but there's interesting things to talk about. We're coming up on our time though, so no time to talk about it today. But what else am I forgetting to ask you? What should I be asking you that I'm not bringing up?
Well, I think the most important thing is you look at this project, and you know when you have CapEx expenditures that run away when you build projects. They range, you start off at $500 million, they end up being 1.5 billion. So a project like this, because we're in so close proximity to all this infrastructure, we wouldn't have to build a tailings dam. We wouldn't have to build a mill because we could use existing infrastructure. So that's a huge, quick payback period. You see a very high net present value for this potentially in the future with a healthy rate of return. So you leverage in the district. We wouldn't even have to build a camp for the employees. They can all drive home at night. So location is everything. And like I said, we're 0 kilometers from, all this infrastructure. We're right in it. We're right in the midst of it. So it's a great place to build a mine. And it got the support of the community and the First Nations. There's no issues there at the moment. So yeah, a great value opportunity, compared to, places that are more distal, like in the Yukon or, British Columbia, Northern Ontario or Northern Quebec even, or Northern Manitoba. Like we're in the South, we're in Southern Abitibi, and there's just a lot of people and a lot of infrastructure, and they all support mining.
Yeah. Yeah. That's right. Again, hopefully you can make the market realize that, or hopefully you can help whoever's been selling realize that they should stop selling. Do you know who's selling? Like, do you have access to that? Someone calling you up saying like, "Hey, I want to sell. Find me a block," or does that happen?
Well, sometimes we have to actually do the calling. Like, we found out who was selling, and then we basically took it out ourselves. With people that we know that were interested in getting a position. So sometimes it's a lot of hard work. So like I said, we put a lot of energy into our marketing and investor relations outreach. Sometimes we have to do extra work to find out what's happening. And that's why a lot of shares were sold yesterday, but we covered it. So yeah.
Yeah. It's not easy.
No.
That's part of it. So I get that part. John, thank you so much for doing this. Hopefully we can follow it up in the future. I'll keep an eye on your releases. And yeah, again, hopefully we can sit down again in the future. But thank you so much for sitting down with me.
Yeah, thank you. Great talking to you, Antonio.